Almost 2 years ago to the day, we started to hear about the coronavirus pandemic, a new virus eerily similar to SARS that was starting to worry a fair few people over in China. Now, at this point, it was very early days. The Chinese Communist Party was suppressing any and all free press regarding the virus, determined to protect the country's pride and ensure that no one ever found out what was really going on. Of course, that never ended up working. The virus broke free. It spread to every corner of the world, and within just a couple of months, the world started to panic. It pretty quickly became clear that things were going to change, that businesses were going to be shut down, schools would be closed, and people confined to their homes in an attempt to curb the spread of this virus. Go back to March of 2020, and this was all coming to fruition. Governments were starting to react, and markets were starting to panic. Here enters a man, a hedge fund manager, a billionaire, and someone with more money than morals. Bill Ackman, who was determined to ensure that no crisis should occur with at least one person getting filthy rich. He went on CNBC and he screamed at us all. He told us that the world was ending, that hell was coming, and that everything was about to change. In that now infamous speech, he outlined his beliefs, his views and thoughts on the pandemic that was quickly evolving, but what he didn't reveal was his secret portfolio that was perfectly poised to drastically increase in value as he spread fear amongst the markets. The really worrying thing is, though, that he might be doing this again, or at least that's what some people have been claiming. Bill Ackman recently went on another rant, screaming this time at the Fed, claiming that once again, hell is coming and that we must act now. Today, we're going to look back at what he has to say right now, what his fears are, and how this situation, which is still evolving as we speak, is similar to the one at the start of the pandemic. But first, leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. So what exactly happened back on the 18th of March 2020? Well, Bill Ackman went on CNBC and he said this.
A number of ideas you put forth. I'm going to read one of them for our viewers to start. Mr. President, the only answer is to shut down the country for the next 30 days and close the borders, you say. Tell all Americans that you are putting us on an extended spring break at home with family, keeping only essential services open. The government pays wages until we reopen. I know from our conversations that you have been worried for some time. How did it manifest today with these tweets and going public?
Maybe just a little bit of context. I'm an optimist, but beginning in, late January, I was getting increasingly bearish, and I woke up with a nightmare. And my nightmare was you have this virus that replicates and infects incredibly rapidly. Each person infects 2.5 people, each of whom infect 2.5 people. One becomes 2, 2 becomes 4, 4 becomes 16, 16, 256, 65,000. You get to just massive, massive numbers. I'm watching this thing roll out in China. Okay, and the same thing's happening right now in our country. Right, it starts with the guy who owns a Embassy Suites hotel. Okay, he's wiped out. Right, you've got when you go from 80% occupied to 0. Okay, you're toast. You go down to 50%, you're toast, but you're certainly toast when you go to 0. So he defaults. But now, take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties, down from like 120 to 50. Okay, it's going to 0. Okay, along with every other hotel company in the world. Park Hotels and Resorts. This, stock's down from 33 to 4. This is a spinoff from Hilton. Why is it down from 33 to 4? Because every hotel is going to be shut down in the country. Everyone.
Hang on just 1 second. You say Hilton is going to 0? I mean,
again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done. Okay, because no business can survive a period of 18 months without revenue. Okay, and stick with me, and that's what happens. Okay. If you operate the way we're operating now, the hotel industry and the restaurant industry will go bankrupt first. Boeing is, on the brink. Okay. Boeing will not survive without a government bailout. Okay. So look at airline industry, auto industry, restaurant industry, hotel industry. Capitalism does not work in an 18-month shutdown. capitalism can work in a 30-day shutdown. And we got to do the 30-day shutdown. And if the president has to bring out the National Guard to keep people in their homes, which I don't think he will need to do, he should do it.
In short, he spread fear. He screamed bloody murder and warned us all of our impending doom, and in doing so, he helped to trigger a crash of a bunch of different companies, all of whom were likely to suffer under the circumstances that he described. Hilton Hotel's stock fell over 50% over the course of about a month. Park hotels and resorts lost almost 70% across that same month, and Boeing fell over 70% as well. Now, what Bill had failed to mention was that he knew this was going to happen. He knew his voice was loud enough and well known enough to cause this crash, and he made sure that he was ready to profit from that knowledge. Behind closed doors, he built a portfolio up of credit default swaps based on companies that he knew were going to crash, in a move eerily similar to that of Michael Burry's Big Short. All in, he put around $27 million into this hedge, into this trade, but by the end of the month, when he cashed it all out, he had $2.6 billion sitting in his bank account. This trade that was put together over the course of a few weeks, that only took a month or so to come to fruition, and that was fueled by a manic rant on a TV news station, became one of the most profitable single trades of all time. Now, Bill understandably got a lot of flack for this move. Once it emerged that he had essentially manipulated the entire market and made over $2 billion off of the back of panicking investors. It was a shady move, no doubt, and if I told you about it without going into detail, you'd probably think that this all happened long before the SEC even existed, back in the roaring 20s when market manipulation was all too common. The reality behind the situation here, really, is that this should have been a crime and not a small one either. But the nature of the financial system in the US means that this sort of stuff goes unpunished constantly. Now, that story is full of facts. We know for a fact that Bill built up his short position in secret. We know for a fact that he spread fear and panic throughout the markets, and we know for a fact that he profited to the tune of $2.6 billion as a result. With this next story though, we aren't so sure. We know things have been said and actions have been taken, but this situation is still evolving and there are a few key differences as well. Nonetheless, this could turn out to be Bill Ackman's second big short, his second run at market manipulation, and so it is without a doubt worth talking about. Now, if you're like me, you probably have some concerns about the state of our economies. With inflation at 7%, lots of investors are looking for non-market correlated assets, and that's where this video's sponsor, Masterworks.io and Fine Art, comes in. Fine Art has proven to be a far better investment than you probably realize, returning 14% a year compared to the S&P 500's 9% a year since 1995. The only problem is that art starts to become a reliable investment once it passes the $1 million mark, and most people don't have millions of dollars to spend on a properly diversified art portfolio. But Masterworks.io fixes that problem. They buy incredible pieces of art ranging from $1 million to $30 million by artists like Banksy and Picasso. They then securitize them with the SEC, allowing investors to buy shares on their site in an initial offering similar to an IPO. Once you've bought part of your favored piece, you can then hold on to it until the piece is sold, at which point you can cash out, or you can sell your shares on the secondary market to someone else. Investors already received a 32% annualized return in 2020 from their sale of Banksy's Mona Lisa. Masterworks.io is democratizing the art market and allowing the masses to invest in an asset class that was previously unavailable to us. So if that sounds interesting to you, if diversifying your investment portfolio is important to you, then make sure to check out Masterworks.io. There's a link down below in the description for you to check out. So what exactly is going on? Well, a couple of months ago, he came out with these tweets. I gave a presentation to the Federal Reserve Bank of New York last week to share our views on inflation and Fed policy. The bottom line, we think the Fed should taper immediately and begin raising rates as soon as possible. We are continuing to dance while the music is playing, and it is time to turn down the music and settle down. As we have previously disclosed, we have put our money where our mouth is in hedging our exposure to an upward move in rates, as we believe that a rise in rates could negatively impact our long-only equity portfolio. He explained that he gave a presentation to the New York Fed and that the overarching thesis of his talk was that the markets are fraught with risk and that the Fed needs to end their asset purchases immediately and raise rates as well in order to preserve financial stability. He also said that he is positioning his fund to do well as interest rates rise in a preemptive attempt to stop people from claiming that he's just trying to manipulate the market. Of course, just because he's clear about where his money lies, that doesn't necessarily mean that his intentions are pure. But let's assume they are, even if we don't necessarily believe it. What were his arguments? What did he say in this presentation? And most importantly, is he right? Now, the first thing Bill talks about and establishes is that tighter monetary policy is necessary when inflation is high and the economy is strong. He looked at points in the past when the economy was strong, inflation was high, and tighter monetary policy was adopted, and he compared those times to today. What did he find? Well, he found that at almost every point in history when interest rates have been raised in the US, inflation was not as bad as it is today, and the economy was stronger. Basically, what he did here is perfectly and succinctly explain why under any other Federal Reserve chairman dating back 100 years, it wouldn't be a question of when will the Fed raise rates, it would have been a question of how long ago did the Fed raise rates. On this front, it really isn't credible to argue against what Bill is saying. He's right, the Federal Reserve is too dovish and inflation is ridiculously high, and yet still, interest rates are at zero, and this is just utter insanity. Next, Bill went on to explain that one of the justifications that the Fed have given for not raising rates at this point in time has been fears from the Delta variant and the Omicron variant that were going to disrupt the economy, cause people to cower in their homes in fear of these variants, and the economy would suffer as a result. Now, this narrative is actually still present even today in many mainstream media outlets, but the evidence to support this idea simply doesn't exist. Businesses are getting back on with their operations, people are getting back on with their lives, and the Delta variant and the Omicron variant as well do not pose a threat to our economies, and according to Bill, this means that the Fed should not be able to use the existence of those variants as an excuse to keep the money printer churning and interest rates at zero. Once again, I'm afraid it just isn't really possible to argue against Bill here. His points are backed by real intrinsic data, and it's as clear as it can be. I will actually link to the entire presentation in the comments down below for anyone who wants to see all this data firsthand, because there is just so much of it and it all supports Bill's arguments. Now finally, Bill pointed to the actions and the statements of countless other incredible investors, economists, and even financial institutions, and the fact that they all recognize that inflation is a serious threat and a hawkish monetary policy is essential to ensuring that inflation doesn't spiral out of control. Bill pointed out that the Bank of England has already started raising interest rates and that the International Monetary Fund is chastising the Fed for refusing to take action. Once again, Bill's points are real and irrefutable. Now, I'm not going to sit here and tell you that Bill Ackman is not sitting here once more telling us that hell is coming. By all accounts, that is exactly what he is doing, and he has also positioned himself to profit from the chaos that is surely going to follow. But none of this means that he's actually wrong. I know it's easy to get wound up, frustrated and angry with how he behaved with the pandemic, at the fact that he manipulated the media for his own gain. I know that it's tempting to just write everything that he says off as some kind of ploy to enrich himself, and maybe that's even fair, but the points that he's made stand on their own. It doesn't matter who makes them, it doesn't matter who came up with them or who spreads awareness of them, they are backed by data and empirical truths. To ignore what is being said simply because of who is saying them is, in my opinion, foolish to say the least. Applying pressure onto the Fed to act responsibly and in the interest of the people they are meant to serve is a good thing, and there have been recent developments to suggest that this sort of pressure applied by people like Bill Ackman is working. Just a few days ago, Brainard, the Federal Reserve Governor, came out and made her position clear that come March, interest rates should rise and it's time for the Fed to act. We saw similar statements coming from the presidents of the Fed in Philadelphia, Chicago, and Richmond. Jamie Dimon, the CEO of JP Morgan Chase, has come out and said that 7 rate hikes are going to be necessary in 2022 in order to curb inflation. The tide has turned. The Federal Reserve and Jerome Powell in particular have destroyed their reputation with their hubris, their inability to even consider the idea that they might be wrong, and they've already brought suffering onto millions of already struggling Americans. The pressure is here, it's arrived, and like him or not, Bill Ackman is a man that the world listens to when he speaks. This is now all conjecture, but I believe there's a strong chance that Bill has been a very influential person when it comes to Federal Reserve policy, and in this instance, I think he's done everyone a favor. Does this mean that this isn't another hell is coming moment? No, not at all. The similarities are just too similar to write this off as a purely philanthropic venture. But make no mistake, if Bill is right, if interest rates do rise, then he will make lots of money, he will get richer, but inflation will also fall. Pressure on the supply chains around the world will reduce, shortages will get fulfilled, and life should start heading back to normal once more. That's it for the day, I'm afraid. I'll see you all again tomorrow. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for watching, thanks for the support, stay stoic, until next time.